All right. Oh, semiconductors, SOXX, PHLX, semiconductor ETF. And I don't know when, but the last time I did this podcast, this were my scribbles. I had a pullback towards that monthly defined breakdown, turn resistance. I had that declining 12-month moving average, and I had a big atomic bomb right here back to these lows off that base, that important 2015-16 base, which is a lot of resistance, turn support. But no, that's not the way it went down. And that is why you have risk and money management. So if ever the price action doesn't go in your favor, you minimize the loss and you wait, and you gather more evidence. You see how everything morphs and you jump back in. That's the framework. It has to be as simple as that. There's no pride. I was right. I was wrong. It's you throw out your ideas. You evaluate the checks. Checks. Stan had a whole bunch of checklists. And I call that, or Stan called that, the weight of evidence. And when you feel comfortable that you have all the checks with your framework, you take position. And after that, even if you're wrong, you still have the your risk money management to protect you from having more than 1% loss per trade. But let's see. This is a good example. Let's see if we ever had a chance to play that off right here in that January candle when it started going back up. Because remember, to know that the pullback has started to go back down, well, you need a red candle. So you're going up, green. And as long as you don't have a red candle, here you're going green, red candle, then you know that was a turnaround. It could keep going back up, but at least you've confirmed that was the immediate high. You closed below on the following month. And after that, you could go down or up. But that was a pivot point. So that's what we wanted here. On the monthly chart, there definitely is not. There was never, even here, if I take this embryonic top pattern right here, we could have had a bounce here off close the 12-month average. But we're going to zoom in on the weekly, and we want here to see some red candles, some weekly red candles. Monthly candle chart. So what are we now? Now we're back into stage 3. So 12-month average, instead of declining, we've had price action close above and above. It's starting to incline. This is like right here, stage 2, stage 3. Could have went to stage 4, but didn't. And that's called the stage 3. And stage 3 sometimes resume back in stage 2s. So right here, we're in the stage 3. What this did was create a bigger top pattern. So this is the range. Right now, we're right close onto it. There's buyers coming, and then the sellers pushing it down. March is not over yet. So this is very critical. A close above the close, 190.50. Close above that. I got an implied measure move. Add it to the breakdown line. And semiconductors, you'll see, it looks pretty much like the NASDAQ, the tech stocks. And here's my measured move, my target up here, if I got a monthly candle close. So for bulls, watch out for that here. That's what you want, close above, and then you get that target here. All right, let's zoom in on the weekly. Let's see if I would have. So it's pretty cool keeping my scribbles right here. Sorry, right here. So let's imagine. Right here, I said maybe a pullback up, close up towards that support turn resistance. Hold on. No, okay, I'll go back. And let's see what happened. Next week, down. Okay, now we're starting to go up just a little bit later than I thought. So what we need now is when we hit that monthly defined support below the Ichimoku cloud, below declining 12-month average, 30-week average, we need a red candle. Green. And when we finally get our red candle, this premise of the pullback, playing on the pullback, is evaporated. You never short if you're above a 30-week average. So right now, this turnaround is just a different situation. Now we're testing instead of being able to play a stage 4 pullback, we're back into a stage 3 on the weekly. We're tempting to go on a stage 4, but we've identified monthly defined resistance. Remember, Stan always tells you higher trend, make sure you're aligned with it. So that's how we align our weekly Stan Weinstein stage analysis with the higher trend. We go define it on the monthly, draw the line. So nothing to see here. It pulled back, but now it's hitting that support or previous resistance. Now turned support. Was some more monthly to support before, and it's looking to want to break out. What do we want? Well, if we're going back into stage 2 mode, you want right here. This is a very good sign, starting to outperform the SPX, bouncing off that zero line, green. Now you have an inclining 30-week average. Check, check, check. Remove that. I want this type of volume right here. I want a green candle. So maybe next week, and if it could come, or the end of the month, maybe this candle here, and let's say, and then boom, big close with that big volume right here. That is what you want to see. 2 times the average of the previous 4 weeks, inclining, and that will really give some steam, especially if we have that monthly close above this 190 level for a semiconductors continuation stage 2. Look at that, outperforming the SPX all that time, the NASDAQ, semiconductors. And here you have those volumes on those breakouts starting, twice the average volume of the previous 4 weeks. Here you had a lot of volume. It wasn't on a breakout candle, probably on the smaller time frames. Base up, sideways move, base up, until we're starting to get more and more volatility. And now closing below, hogging through average. Not a good sign. A lot of warning signs. Even should have exited right here, and that would have been pretty close to the top. Because if you would have exited here, we would have saved a lot of time. That's April 2018. Now we're almost there, so you save yourself 1 year of staying in the stock just by respecting stands. A close below 30-week average, you're out of there. Just to look for example, right here, still inclining. Okay, you're out. Oh man, it's green. I want to go back in. Goes down. Could have went up. So what's happening here? You don't get back in right when you close back above 30-week average. You've defined. Now the chart has morphed, and you have that monthly defined support or resistance being defined. You have some weekly defined resistance being defined, and then that's your continuation pattern has to overcome those previous highs. And then if we would have broke out above these levels here, then you say, okay, stage 2 continuation breakout above an inclining 30-week average, above the Ichimoku cloud. But right here, if you jump in because you think, oh, we're back into a stage 2, well, look, you're running into this resistance. Sellers coming in. Then again, oh, I can't even get past this previous high. So lower highs. And right now, same thing here. If you get in too early, you're still going to hit that monthly defined resistance, weekly defined. We're going to test it later. So this is very critical. Really keep an eye on what's going to happen in the next few weeks. I'm going to keep an eye on semiconductors. It's going to be probably the same thing, the fate of the NASDAQ, all intertwined. So remember, have the plan. And if the plan doesn't work out, part of the plan was at risk and money management. And then you just evolved. You wait. You see how the chart morphs. So right now, this is how I see it. Stage 3 on the monthly, stage 3 on the weekly, and if it starts turning around on the weekly, you want it to turn around on the monthly also, and then get that implied measure move all the way up here. All right, guys, that's it. All right, ciao.